Ari, fantastic to see you.
Always a pleasure.
So before we get cracking, give everybody a bit of your background, how you got to what you're doing now, and then what you do now.
Well, I'll keep this very brief. So I'm co-founder and CIO of BlockTower Capital. We're a crypto asset management firm. We launched in August of 2017. And before that, I was an endowment investor. We were just chatting before this about kind of fund of funds and endowments. Most endowments follow kind of a fund of funds model. So there I was a long-term investor, portfolio manager, and also I had the title of risk manager. Before that, I was a trader, a prop trader. So my kind of TradFi career was the two opposite ends of the spectrum, short-term market making, trading, arbitrage, and then kind of very long-term endowment style fund of funds investing and portfolio management. I'll keep this really brief, but the three reasons I always give for why I got into crypto was one, the humanitarian side, genuinely motivated by, I had some relatives who were able to flee Nazi Germany, others who couldn't. And so the idea of defensive technology that can help people potentially flee with more than the shirts on their backs was appealing to me. Another was the intellectual side that TradFi, I was doing work on risk premia, for example. We were calculating the second decimal point of things like the equity premia or small cap or, momentum premia. Whereas in cryptocurrency, it very much felt like we're pre-Benjamin Graham security analysis. I get to talk to fund managers and kind of participate in that incredibly blue ocean intellectual exploration of how do we even think about value in the space. And then the last is trading. Trading's pretty competitive in TradFi, and when there's good opportunities, they tend to get arbitraged away pretty quickly because you have a lot of smart people and capital. And cryptocurrency is just wildly inefficient and was kind of the juiciest trading market that I had ever seen. So those were the three things that got me into cryptocurrency in 2017.
When I look at, you being in a hedge fund in this space, I just think of the alpha that is here because, as you say, there's so much unknown. We don't have a set of rules. Every day there's another 10,000 new tokens listed. The complexity keeps rising. And there's very little capital in the kind of hedge fund space compared to elsewhere, which means that alpha is extraordinary. How do you approach alpha in this?
So I think you can profit from cryptocurrency with almost every strategy that exists in TradFi, whether it's arbitrage, yield, there's DeFi yield farming, there's playing the futures curve, there's asset selection, market timing, almost anything that exists in TradFi, and maybe every single strategy kind of has some analog in cryptocurrency. And I don't think there's a right answer there. So it's really, where can you have structural advantages? What are you suited for? So in my case, and in BlockTower's case, we kind of started with my wheelhouse as a trader and what I was most experienced with, and then have gradually grown a team and try to tackle more and more opportunities kind of over time. And I think, frankly, it's a similar story for most entities in the industry where people start as 1 or 2 or 3 person teams tackling what they know best. And then as they build a platform, they often add other funds or bring on experts with other expertise. So to give a more concrete answer, we do a lot of different things. Everything from we're very active in Bitcoin and Ethereum options, for example. We do long-term asset selection and fundamentals. We do catalysts. We look at things like token unlock schedules and trade around that. We're very active in all sorts of derivatives, playing futures curves and perps. What else can I share? A lot of our time is fundamental, though, is really thinking about where's the industry going, where's value being created, where will value accrue. I think my sweet spot as an investor seems to be kind of 3 to 12 months out, kind of saying like, what are the up and coming narratives? And also, okay, there's a lot of hype around these types of projects. You don't need to be a really deep technical expert sometimes to look at them and say, this isn't going to have a really usable product for another 2 years. So lots of, something like DeFi in 2017, like Uniswap was born in 2017. It was very clear, like there isn't going to be usable DeFi for at least a year, probably more like 2. So kind of some fundamental assessments and our market expectations in line with the underlying tech and the UX and the products being built, and then making bets on that.
And so do you think that those early projects, so you see something like Uniswap, it's interesting. Do you just then not invest until you start seeing some traction? Or do you kind of dip your toe in the water because you want to get some involvement in it? How do you approach stuff? Because there's so much new stuff.
Yeah, let's see. So the answer for us has been basically we didn't have a VC fund. We had a hedge fund and we did side pocketed liquid investments. that's not an ideal setup for making, say, 5-10 year long equity bets. So we might be allowed to do it, but we don't have the ideal structure for it. So our approach has generally been certainly more focused on the liquid side. We have made some very long-term equity checks, but those have to be kind of a very small percentage of our capital. We are looking at launching a standalone VC structure at some point. And that would change our strategy, and we're bringing on talent appropriate to match the opportunity set. So the way I think about this really high level is, what are the moats in investing? It's a pretty finite list. Generally, it's things like either relationships, maybe really, really deep understanding of the marketplace and the key players. I'm not sure I would call that a moat, but that's an advantage that you can then leverage with many different strategies. So my thinking was, in 2017, this is a tiny industry. There aren't that many people in it. There aren't that many key players. There aren't that many projects. There aren't that many technologies. If you kind of master what's there, you can then earn alpha in many, many different strategies. You just need the right investing skill set. So I'm not a VC. I really shouldn't be kind of leading a VC fund, but I can hire people who are good at that. Same with arbitrage, same with machine learning, same with option market making. You can hire for specific skill sets, and then as a platform, you try to apply things like kind of this base understanding, the relationships. You can get discounted exchange fees, you get lower cost of capital with borrowing because you're a trusted counterparty in the space. So one thing I'm spending a lot of time thinking about, frankly, is how do you create structural advantages? So like in TradFi, firms like a Citadel or BlackRock, they don't win long-term because they have the best people. People are everything, but people are also mercenaries. People aren't a moat. Most investors will go where they're paid highest if they're treated reasonably well. So it's about building. Citadel famously built kind of the tripartite shadow banking system, and they got themselves access to cheaper cost of capital than almost any other competitors. So trying to build those structural advantages, I think, is critical if you're trying to build a long-term successful franchise. On the VC side, that might be more brand-oriented. So you look at like Sequoia, USV, a Benchmark. There's persistent alpha in VC from that brand because the brand translates into like deal flow, deal access, things like that.
So how has your approach to asset allocation evolved as the space has evolved? Because when you start off in 2017, it's actually probably a simpler world because you can allocate across fewer assets, but this whole ecosystem has deepened massively. How has that changed? You're obviously putting in different specific risk buckets. I see that. But in terms of approaching the space at a top-down level, how have you changed?
Yeah. It is an extraordinarily different industry than when we launched in 2017 in that it is so much deeper, so much broader that I think back then a smart person working full-time could basically understand crypto in 6 months. At a high level, have a decent understanding of all the key concepts, all the key players, all the key projects. Today, I don't even know if any amount of time, there was a saying in New York City that if you went to a new restaurant for every meal, you would never exhaust the list of new restaurants because there were more than 3 new restaurants opening a day. It kind of feels like that way in crypto now, where even if you're working full time, 18 hours a day, you're just never going to be perfectly caught up because it's taking over the world. It's just the pace. So for me personally, what that's meant is we've had to grow our team. I have to lean heavily on analysts and other investment professionals where I really have to trust their judgment and expertise in certain sectors. So for example, anyone who's interacted with BlockTower has probably heard me say something like, oh, if you want to know our opinion on small cap DeFi, you got to talk to my smart analysts, Blake, Vic, or my co-PM, Avi, who know infinitely more than I do and are following it so much more closely. You just don't have the bandwidth to review everything. I'm doing nothing else other than this. And this came up like a week ago when I asked one of my analysts for a few small cap DeFi names they really liked. We were thinking about adding a little exposure. And he gave me 4 names with a little summary. And I hadn't even heard of any of them. And all of them had live products with more than 200 million market caps and more than 200 million in TVL. They had live working products fully deployed at a scale that surpassed where Uniswap was 18 months ago. And I hadn't even heard of them. So that's where the market is. And what's happening is anyone who wants to be a general investor in the space is having to grow teams, it's starting to look a little more like TradFi where you just need bigger headcount.
I hope you enjoyed this clip and will decide to join us for the rest of the interview, among many others, on realvision.com/crypto. The crypto channel is 100% free. You just have to sign up. Look forward to seeing you there.